Welcome back to Forex Made Simple. Before we get started with the strategy, I want to take my time to say thank you to all my subscribers for the positive feedback that I've been getting. I really appreciate the love that you guys have been showing to the channel. So if you are new to the channel, I'd also encourage you to subscribe and never miss any future video. So get ready to take notes because you are about to learn a very effective strategy. I've also created a free PDF that includes everything that I taught in this video. The link to the PDF is in the description below. Now let's get started with the strategy. So firstly, I want you to pay attention to how VIX-75 moves. This is the simplified version of how VIX-75 moves. So we normally have a move up, a move down, then a move up, then a move down, then a move up, then a move down. So as you can see, we have a series of waves which form uptrends and downtrends. Uptrend, downtrends, uptrend, downtrends. So even at a beginner level, I'm sure you know that the aim is to buy the lows and sell the highs. If you had placed your sell up here, you were going to make profit as the price declines down. At the same time, if you had placed a buy right here, you were gonna make profit as the price goes up. So basically we buy when we anticipate that price is gonna go up, and then we sell when we anticipate that price is gonna go down. So your job as a trader is to know when to sell and when to buy. But don't worry, because that's what I'm gonna show you in this video. So one thing that makes VIX-75 stand out is how it changes from downtrend to uptrend and from uptrend to downtrend. Because before it switches trends, it gives us reversal patterns, which tells us that we are switching from one trend to another. So right here you can see we have a uptrend, reversal pattern, downtrend, reversal pattern, uptrend, reversal pattern, downtrend, reversal pattern, and so on. This strategy focuses more on the reversal patterns, and we have 4 reversal patterns that we are going to focus on. And what you're going to have to learn is to be able to recognize these patterns and know how to trade each of them. But don't worry, because I'm going to explain all of them thoroughly so that it's easy for you as a beginner to understand. So the first pattern that we're going to focus on is the double top. And the name double top comes from the fact that it has 2 tops, as you can see. But the easiest way to identify this pattern is to look at it as forming the letter M. And as you can see, we have another double top right here. And I intentionally made the second top to be way above the first top. And the reason why I did that is because the market is not perfect. So you are not always gonna get perfect double tops like this one. Some are gonna be smaller, some are gonna be bigger, some are gonna be uglier, but don't worry, you will see that as we open the live charts. And the second pattern that we will focus on is head and shoulders pattern. So this is the head and shoulder pattern. As you can see, it looks like a person, and this is the person's head and the person's shoulders. That's the way the name comes from. So we say this is a left shoulder and this is a right shoulder. And when it's standing upright, we say it's a bearish head and shoulder. That's because it leads to a bearish trend. A bearish trend basically means a downtrend. So that's why it's called a bearish head and shoulder. This one right here, it's called a bullish head and shoulder. So as you can see, the bullish head and shoulder is just an upside down bearish head and shoulder. And the reason why it's called bullish head and shoulder is because it leads to a bullish market, which is an uptrend. So bearish means downtrend, bullish means uptrend. And that was the third pattern. So our fourth pattern is this one right here, which is a double bottom. And as you can see, a double bottom is just an upside down double top. And the easier way to identify the double bottom is to look at it as a letter W, as you can see. So right now I'm gonna open the VIX-75 chart so that we can see these patterns in real life. So as you can see, we have the VIX-75 chart, and my favorite time frame for VIX-75 is the 15 minutes time frame. And already within what we can see right now, I've already spotted a lot of patterns. The first one is this double bottom right here. So you can see we have a downtrend, double bottom, then uptrend. So as I said, these are reversal patterns. So this was the market changing from downtrend to uptrend. So this is a very clear pattern. And I hope you can see that pattern. Another one, I think I'll have to zoom out for this one since you are a beginner. Another one is this double top right here. You can see we have uptrend, then downtrend. Another one is the one that's forming right here. And as you can see, this is another potential double top. So actually this is a valid entry. And I think I'm just gonna enter right here. So we'll see how it goes as we continue with the patterns. And as you can see down here, we had a very big bullish head and shoulders pattern. So this is a downtrend, left shoulder, the head, and the right shoulder. And right here, if you wanna force it, you can say this is a M pattern. But that's not what I look into. I normally don't trade these kind of ugly ones. I look for the obvious patterns like this one, and this one. As you can see, we have variations of these patterns. Some are bigger and some are smaller, like this one right here. Like this bearish head and shoulder right here. It's smaller. You can see another smaller bearish head and shoulder right here. Actually, let me zoom in. So you can see we have an uptrend, left shoulder, head, right shoulder, then downtrend. And the smaller pattern is associated with smaller trends. The bigger patterns are associated with bigger trends. So I don't want to waste your time by going through all these patterns. There's a lot of patterns. You cannot finish them. Even within just here, there's a lot of patterns. As you can see, we have another double top right here. So you can't finish these patterns. So right now I'm gonna show you how to trade each of these patterns. So firstly, we're gonna start with the bearish reversal patterns. And these are formed when the market changes from uptrend to downtrend, which is the reason why we use them to find sell entries. So firstly, we have the double top. And the important thing is that you should see these patterns before they are fully formed. What I mean by that is that by the moment you have a full M, you are already late for the entry. And if that doesn't make sense at the moment, just hold on, I'm gonna explain that. So how you trade a double top is that after the first top is formed, you draw a line on top in anticipation of the second top. So you wait for the market to make the second top. Now when the market is back to this double top area, all you are looking for is a smaller move to the downside, and that's gonna tell you that we are forming the double top. And this is the point where you're gonna place your sell entry and put your stop loss right above the double top area. And after that, what we are expecting is the push to the downside to complete that double top pattern. So as you can see, if you come and see a double top while it's already here, you are already late because you are supposed to catch this move. So the only way to catch this move is to anticipate it while the market is still up here. So that's why you enter right here. And this is usually after 2 red candles because these are green candles, and after it has turned, you place your sell entry after the second red candle. And this will make perfect sense after I've shown you how you place an entry on real markets. And another pattern that we use to find sell entries is the bearish head and shoulders. And this is how it forms. So once you have something like this, you should already be seeing a left shoulder and a head. And all you are waiting for is that right shoulder. So to make it easier to see, you simply draw a line. And you will use that line to give you an indication where the right shoulder is likely to turn. And after the market has retraced back to the shoulders area, all you need from this point is a small turn to the downside, which confirms that indeed we have a right shoulder. So after a small move like this is where you enter for a sell and put your stop loss above the shoulders area. And what we are expecting after here is a move to the downside, and that completes the whole pattern. So I will repeat this point. The important thing is to see this pattern even before they are fully formed, because if you see it after it has fully formed, you are already late. So for buy entries, it's exactly the same things for the sell but flipped upside down. So for double bottom, as you can see, this is where you enter your stop loss down here. And for the bullish head and shoulders, this is where you enter and you place your stop loss right below the shoulder area. So as you can see, this is the entry that we just made few minutes ago. And as you can see, we are in small profit. And I like the fact that we have these red candles, which is a very good signal for that bullish move to the downside. So this is a double top. You enter after a few red candles and put your stop loss on top. So that's how I enter. And for this double bottom, I would have entered after the second green candle, which is this one. And my stop loss was gonna be down here below the double bottom area. And my take profit was gonna be right here where the previous trend started. And that would have been a successful trade. And for this double top, I'm just gonna remove these drawings. And for this double top, I was gonna enter right here on the second red candle. My stop loss above the double bottom area. And my take profit was gonna be where the previous trend started, which is right here. And that was gonna be a successful trade also. And for this bearish head and shoulder, I would have entered somewhere around here. My stop loss below the shoulders. And I was gonna target where the previous trend started. So my target was gonna be right here. And as you can see, that was a successful trade also. So, and as a disclaimer, you should know that you are not gonna win every single trade. So it just happened that within this scope, most of the trades were working out. And in truth, I could have taken some other trades which could have happened to be a loss. For example, if you look at this price action right here, this is a valid sell according to our strategy, because we have an uptrend, then the first top, then the second top. So at this point, I would have been expecting a drop to the downside. So I would have entered right here for a sell, but the market just continued up. That was gonna be a loss. So just make sure you don't have unrealistic expectations. You're gonna take few losses along the way, but as long as you don't let them discourage you, you are gonna end up profitable in the long run. Lastly, I want to show you what I call the 3 rules. Number 1, you need to control your emotions. If you can't control them, there's only one outcome, which means you are gonna lose all your trading capital, no matter what strategy you have. So emotions aside. The second one is that you never trade without a stop loss. And usually trading without a stop loss is an emotional decision. Because the reason why you don't put a stop loss is because you think you are right. And what I've learned is that you never know what the market is gonna do. If you think you know what's gonna happen and trade without a stop loss, the market is a way to show you that you are wrong. And when it does that, you're gonna be hurt. Number 3, move your stop loss to break even after you are in profit. And that's self-explanatory. So if you don't know how to move your stop loss to break even or to trail your stop, you can watch my video on how to trail stop loss. So that's it for this video. I'll see you on the next video.